Hello, everyone. This is Socrates. I'm here with Tyler Jenks of Lucid Investments, and we are going to be taking a brief look at Bitcoin today, as well as some traditional markets. Bitcoin is at a crucial spot coming off of a weekly red 9 and pulling back into the bull trend line that we have been keeping an eye on over the last couple weeks. The traditional markets are very interesting right now. The stock market is showing some signs of danger, some things that we want to be keeping an eye on, and then also seeing some very interesting things with some individual stocks. And if we get the chance, maybe we can take a look at gold, which has been making a big move as well. So appreciate you having me on today, Tyler. Looking forward to looking at some charts with you.
Yeah, this will be fun. What's interesting for me is Socrates and Leah joined me in Chattanooga for the last 4 days. I'm glad to see Socrates made it back okay to his home in the Rocky Mountains. And this electronic stuff is fantastic, being able to talk to everybody from anywhere at any time. So this will be great. As Socrates said, it seems like every week there's something awfully important going on, but other weeks are more important. And I think this is one of them. Last week was very important because we were closing out the week, not only in the stock market, which was in a very dangerous position, but also, as Socrates said, we're now on a 9 on the sequential system on Bitcoin. One of the things I've noticed is how many people are looking for a pullback. A lot of very bullish people that believe we're starting some sort of a pullback, but that's not shaking their bullishness at all. As you know, we're still long from the mid 6,000 level on half our position. We sold half up around the 8,800 level. We could ride that other half down, and I have not made a determination on that. This show is one of the things that I will be myself listening closely to Socrates and just doing a live analysis of what I see. And maybe from that, I'll draw some conclusions about stepping out of the positions we now have in Bitcoin. We could theoretically ride them down to about 4,500 and still be in a profitable trade because we took half off at the higher levels. I don't see myself doing that. I would much prefer getting out of what we have now if the evidence begins to build that this pullback might be something more than down to 7,500 or 7,000 or 6,500. 65, I don't want to ride all the way back down to where we got in. I would probably be leaning in the direction of putting back in the other 10% and maybe even a lot more in the mid sixes if we get there. So it's a little bit of a difficult call just theoretically for me at this point. Money management is number one, not direction, because we never know direction and time. Some of the systems I have give me a lot of confidence in the direction, but the timing is always tricky, and particularly if you're at potential turning points. And that appears to be true in both the crypto market as well as the traditional stock market, which our listeners know we have gone from 100% long to 75% long to 50% long. The next big call is going to be either being completely out of the US market or to begin building positions back again. So in either case, this analysis is of great interest to me today. And with that, why don't we get started? I think I will start by pulling up a Bitcoin chart, then turn it over to Socrates. I think I will turn my phone off for a while, otherwise we will continue to be bombarded. All right, let's pull this one up. And this is Bitcoin Weekly, the same chart that I've always used. I'm going to go big on it into the monthly and then come back and talk about this 9 sitting here. Also, before I go into the monthly, I still find it fascinating that this line, which is my old phase 2 line, and now is an angular trend line, that for a brief period of time just broke very easily to the upside. Week 6 here on the green 6 came up and tried to get above it, but closed below it. Week 7 went well below it, but then broke and closed above it, but we were getting into this 8, and we didn't make much progress. We tried to get through a setup trend line, but closed below it, as Tone said in his show today, which is pretty important. And now all of this action is below both of these highs and is below the setup trend line. But what we're doing is we're sitting right on this angular line. Now, in theory, if it wasn't for the sequential, we are sitting at a point at which, after 3 weeks of consolidation above this line, it's perfectly normal to assume a move higher. Notice that the long-term, in my case, 30-week moving average that I use in Consensio is moving up and gaining ground and will begin to accelerate. The intermediate term is up and accelerating at greater than a 45-degree angle. The short term, because of the 3-week consolidation, has turned down. And what Consensio is saying, we should still be in a full bullish position. I wouldn't change that until price gets down to the intermediate term trend, which is coming in at 7,400. But there's plenty of reason to think that there could be support in that area. So again, today's discussion will be interesting, hopefully for all our listeners, but especially for me. I love doing this analysis live so I can kind of think through some of the issues. This is the monthly, and the monthly is on a green 4, as Tone has pointed out and Socrates did the other day. We're sitting right on the trend line as we speak. And the assumption is that we've got 5 more months of upside action. Fully bullish in terms of the trend lines. They are not in order, however. We've still got the intermediate term on the monthly below the long term. And because of that, some caution is warranted, looking for some kind of a pullback. The whole question will be, where would that come to? By the time we get down to this green line at about 6,200, the intermediate term could very easily have crossed the long term and being supportive around the mid to low 6,000 area. Okay, so with that, I'm going to bring it back down to the weekly. And the only other thing I'm seeing is the ADX getting up into overbought territory, the RSI into overbought territory and turning down, which is perfectly natural in an intermediate term move. You get overbought fairly quickly, and you can have a number of false breaks to the downside until you're really ready to go down. This is only our first on this intermediate term move. So I don't put too much stock in that, other than the fact that it has turned down. And with that, I'm going to go off screen share and turn it back over to Socrates and let him give his analysis of what he's seeing right now on Bitcoin.
All right, I'll be happy to pull up a chart here. We did have a question come through in chat that I may not be understanding correctly, but I did want to run it by you really quickly. It asks, wouldn't it be a Bitcoin throwback instead of a pullback to the trend line? What do you think about that?
I'm not sure what his definition of Bitcoin throwback is. If I take the name Bitcoin off the chart and just look at the chart itself, what I see is the way I explained it, that I'm pretty impressed with a 3-week break of that trend line without really getting back below it, and it's still trying to hold it. So in any asset class, including Bitcoin, they all act the same relative to the technicals. It is true that Bitcoin is unique in many ways, but I have not seen it unique in technical analysis, other than the speed and the rapidity with which things happen and the size of the moves and the volatility because of the small number of participants relative to the size of those participants. That's an unusual situation. But other than that, I'll let you bring your chart up.
All right, I'll pull up mine. And yeah, how I was interpreting that is maybe that right now, after we broke down the phase 2 line, that would have been probably at the end of 2018, that the price never threw back to retest it for resistance, and that maybe that's what's happening right now, is that we're just throwing back to retest that trend line for resistance, and that maybe that's what's happening right now, is that we're just throwing back. Got some feedback loop here. Okay, hopefully that's worked. I think so. Okay. All right. So yeah, maybe it was just thrown. This is the first time it was thrown back to retest. Maybe that was a possibility. So yeah, thanks for the questions. Oops, I just got a message that they lost me. Hopefully that is not the case. Are you still with me, Tyler?
I am, and I still show the broadcast on and live.
All right. And do you see my chart?
I do. There it is.
All right. Excellent. And just got confirmation we're looking good. So here is the area that I have been keeping my eye on over the past couple weeks, is this bull trend line right here on the 4-hour chart. We can see that this has been very resilient. Every time the price is thrown back to retest here, it has found support before the 9 EMA was able to make a bearish cross with the 50 EMA. Again, this is the 4-hour chart. So we see back in here, it pulls back, falls below the 50 EMA, but never gets this bearish crossover and rallies hard. Back here, we were looking at this live on a podcast a couple weeks ago, and we were noticing that this closed back above the 9 EMA and the 50 EMA after finding support from this trend line could be a potential buy signal, and that was one that I did take, went ahead and entered there. So we got a similar action here back on the 30th when we sold off from 9,100 down to 79.38 or so. We noticed that the price never closed below this trend line. This trend line stayed resilient, and furthermore, we only stayed below this 50 EMA for about 4 or 5 candles. That's been about how often we have been able to stay below before the price shoots back up. So right again here, support from this trend line and close back above both EMAs, then continue to rally. Now, what are we looking at here? We've got a close below the 50 EMA, but no closes below this trend line. Trend line is remaining very resilient, and we just had a 4-hour candle close about 15 minutes ago. I was watching that to see what would happen around this 9 EMA. We've got this area of horizontal sort of resistance built up that is in confluence with that 9 EMA. So closing back above the 50 is very interesting, but it's still not quite the action that I want to see. I've been looking for a close back above about 8,600 to tell me that this held strong, mainly due to this horizontal area here, as well as this 9 EMA here. I want to see the price close above both of those areas. So that is kind of the bullish case right now, is looking at this 4-hour chart and seeing price test this trend line and repeat the pattern of only having a couple candles below the 50 EMA and not having any closes below this trend line. So I am going to be remaining bullish myself until these cross over. Despite the 9 on the weekly, despite the doji that it's coming off of, I'm going to be staying short-term bullish as long as this 9 EMA is above the 50 EMA. So we're getting very close. This is when I like to look at other charts to see if potentially other coins could be leading the market. And I see something very interesting with Ethereum right now. Looking at the 4-hour chart, it's showing a very similar sort of pattern where it's finding support at a trend line and is never getting a bearish cross with this 9 EMA. This whole time it showed very similar action to Bitcoin, always bouncing right back above those EMAs. Look what happened now. We just got that crossover on Ethereum for the first time in a while here. So that to me is very, very interesting. This didn't happen anytime in the past when Bitcoin did find support and did continue rallying. Ethereum also did, and it also kept that 9 EMA above the 50 EMA. So to me, this is very, very interesting right here and makes me wonder, is Ethereum potentially leading the market? So something to keep an eye on. I'm most concerned with the Bitcoin moving averages, but we'll be looking at Ethereum to see if potentially that's leading the market. Looking at Litecoin is another good option there. So that is what I have for you on Bitcoin. Anything you want to say, or you want to move on to traditional market?
That's great. If you could go back to that Bitcoin chart, just one thing that popped out at me is the fact that on the other attempts of your 2 EMAs crossing, where we ended up not crossing and moving up sharply, it looks like the most recent activity is unusual compared to the previous ones, because after we hit a new high around the 28th, it looks like, we pulled back and then went to another new high the next day, and then fell back, and then spent 5 trading periods below your longer moving average, and this time we didn't go up to new highs. So now if we were to turn down here just making that assumption, we would have a high below a high below a high. And that hasn't really occurred where you're watching those two EMAs before. And I wonder if the Ethereum chart might be signaling that a little more caution might be due here because of the failure of this last move up to go to new highs. Now, that did occur before, where all the way to the left of your chart, after that big correction back down, we had a huge green bar up, but we didn't go to new highs. We came a little short, and then we went back down below the longer term moving average, and again didn't go to new highs, and then we exploded to the upside. So I'm not saying that this is a unique situation. I'm just wondering what you're thinking about that interim lower high that we just had, if that's meaningful at all to you.
Yeah, that's absolutely something that I have been keeping my eye on, and am not concerned about it as of yet. I kind of am seeing like what you're seeing back in here, where it would be the first test, and then it would be a little bit of a lower high, secondary test that creates a higher low. That's what's more important to me right here, is this higher low on these last 4 candles or so. That looks like to me is going to potentially be more important than this right here. So that's kind of how I'm viewing that action, and yeah, it will be very interesting to see if that area can get taken out at about 87.45. That could be significant resistance.
And
so
how about my observation that my impression is there's 3 groups of people: those that are always bearish, those that are always bullish, and those that will move between the two depending on various things. It just seems to me that a lot of people that were very bullish, not permabulls, but the ones that have switched from bearish to bullish and have been correct on this intermediate term run up, are looking for a pullback here. Am I overstating that, or do you get the same impression?
You know, for me, I have kind of been feeling that way since about 6,200. Most people were expecting, from my experience, from my perspective, when we got up to 6,200, basically everybody was calling for a pullback, whether it was the people who are almost always bullish, or the people who recently turned bullish, or people that were bearish all the way. Like I was still bearish there myself, so I was expecting a pullback, and it seemed like everybody was expecting a pullback. And since we blasted through that area, it's really, from what I can tell, confused a lot of people, and a lot of people are basically fitting into 2 categories of feeling like, man, I've got more money on the sideline than I want, and I want to get into Bitcoin, but I don't want to buy in after a big rally. So there's a lot of people who are maybe hoping for a pullback and don't really have much reasoning other than they just don't want to. There's been a big increase, and therefore we should pull back, and that's what I'm going to wait for to enter. And then the other people who are really the people who are saying that we're going to keep going higher definitely seem to be in the minority, which is something that is very interesting to me. When everybody starts expecting the same sort of thing, seeing the same areas of resistance and the same areas of support, that's usually when the carpet gets pulled out from under one or the other parties. And it seems like since 6,200, the majority of people have been calling for a pullback, and we just continue to grind higher and higher.
Yep, great. Okay, good. All right, if you jump off screen share, I'll pull up an S&P chart. Stock market struggled a little bit today, but then came back, and we'll see if what we got going here. I'll pull this one up. I'll get out of this one, pull this guy up, and switch over to the S&P. Let's do it here and here. Okay, this is the weekly chart of the S&P. And we're on working a red 5 right now. We've taken out an area that I thought was a good inverse head and shoulder pattern with a target up to 3,300. We stopped at a green 7. We've been going down. According to this, we've got another 3 or 4 weeks of weakness. We are sitting right on the long-term moving average, which is still moving up and will, as long as the intermediate and the short term are coming down. But if price goes a little bit lower, we can turn that long-term moving average back to the downside. I'm 50% out of the market on this pullback. Here we took out on this cross between the 1 and the 2, 25%. We then took out another 25% as prices accelerated down. So the question now is, do we hold, or are there a lot lower lows coming? And my thinking off this chart is, if we look at the RSI, it never made it into overbought territory, but it went almost from oversold all the way up to 65, and now is coming down sharply, and we've broken the midline at 50. I could easily build the case that we're going down to oversold territory. That makes me very nervous. I'm going to take a look at the monthly, only because there's some interesting things going on here also. We only made it up to a green 4 on the monthly, and then we had this enormous down candle. We've now got a price flip. You can see that the 30-month moving average is in no jeopardy and is coming in at 26.35. A lot of people, IBD, CNBC, Barron's, Wall Street Journal, are talking about a 26.50 kind of area for this to come down to. The problem is we could very easily, in a week or so, get on the weekly, get an acceleration to the downside, and that would put this in jeopardy of next month getting a red 2 below a red 1, which always makes me nervous. Also, on the longer term, this is the monthly ADX. No sign of slowing down. This peak occurred at the peak of the market, and even though we have been moving up since December, that has not corrected. And the RSI on a monthly basis after being very overbought at the beginning of 2018, which is the beginning of our lower lows in the stock market, even though in December we had put in our low, this RSI has not responded with price. Price has gone all the way back up to new highs, and the RSI has stalled out at the 65, turned down, and is clearly in the middle of nowhere, with this being the 50 area. So on a long-term basis, it's very difficult to remain bullish. I'm going to go back to the weekly and point out a couple of other things. The most obvious to those that attended our recent webinar on a broadening top is this beautiful broadening top with a 1, 2, 3, 4, 5. And that is a topping formation, and the longer and bigger it is, the more important it is. And we are still in the downtrend from that. On a weekly basis after the high, we've got 1, 2, 3, 4, 5 weeks. We're in the 5th week, which means that using the stops that we use, our stops are going to begin coming down, but are in no danger of being taken out unless we get a very big rally in the market. We're a long way away from this setup number, which is 2560, $100 below the 2650 that we talked about on the longer term charts. And when you take a look at the weekly Consensio lines, you see, as I pointed out before, we're sitting right on the long-term moving average, but the short and the intermediate term have crossed. The intermediate is moving down, and we are now on the short term all the way down, ready to cross the long-term moving average. All of those are different techniques. The Consensio gets you out incrementally as things deteriorate. We are now 50% out of the market, but we're not that far away from making a decision of either beginning to buy again, as long as this long term isn't violated for long and has the ability to turn down, or getting out of the other half of our positions. So what do you see on the charts? I will jump off of this one. I will get out of screen share and turn it back over to you.
All right, I'll pull up a chart real quickly, and yeah, I am very interested in these markets right now, and whenever we're at a very crucial potential turning point, I definitely want to look at a number of indicators that I find important. And the first thing I start with for identifying a trend is Consensio. I do use slightly different moving averages than Tyler. I use the 9, the 50, and the 200 EMAs for my primary moving averages for Consensio, and this is a good example of why. Let's take a look at this 50-week exponential moving average and how powerful it has been. We look at back in here in 2016 when we test it, and it just holds so resiliently, wicking off here, not quite being able to reach it here. So price always stayed above throughout the 2016 to 2018 bull run there. And then as soon as we got a close below, we did get a significant follow through that followed. In October 22nd, we closed below the 50 EMA at 26.56. There was a little bit of consolidation before it continued down all the way to about 23.50. So a close below that 50 EMA is very, very interesting and important to me. And that is what just happened last week. We see that it did not have any of this action that we saw in the past. Potentially, it could end up looking like this if we have a huge week this week. But outside of that, everywhere in the past, we're wicking off it and rallying strong. Here, we're not. We close below, and now this current, we're 1 day into this week's candle, and the whole candle is below the 50 EMA, and we're actually wicking off of it below it. As it has already rolled over, we see that that is now trending down, and that happened very quickly. And this 9 EMA is coming in sharply for a bit of a death cross. So that is something that I will be keeping a very close eye on, very similar with what we're looking at with Bitcoin. If this rebounds sharply in the next week or two, then it could be off for a big rally. Whereas if this stays down here, kind of consolidates, resists this 9 EMA as it tries to get back above, stays below enough for it to get a crossover, now that's going to be very, very important to me. The other moving average that I use is the 200 EMA, and you can see why, how nicely that worked on this last sell-off back in here in January and February of 2016, wicked off of it perfectly. Back in here, found some support, struggled, but ended up finding it. So you can see why I have chosen these moving averages for the most part. In my experience, they are the best at indicating areas of support and resistance. If we do end up staying below this 50 EMA and for long enough to get a death cross, or we just continue selling off before that happens, this 200 EMA is where I'd be looking for the next area of support. It's moving up pretty quick, probably be in the $2,500 range or so. So that is the Consensio analysis. Something else that I want to take a look at is going to be the parabolic SARs. We do see that has recently broken down. We were on a long run here to the upside, and that recently broke down on this candle, and we have continued down from there. So seeing a broken SAR on the weekly is definitely very important to me. That's another check mark for the bears. Now let's go ahead and zoom in a little bit to the daily. Pulling up, we wanted to stay on the weekly there for a second. Take a look at the Bollinger Band. Notice how it did not test the top band, nor did it find support at the moving average. Something that is very interesting to me. Yet another check mark for the bears as far as I'm concerned. They stopped this from going up to the top band like we had in the past. And they also did not, they were able to overwhelm the bears from finding support at this moving average here. Now we're back below. Bottom band is in the 2650 area. Something to keep an eye on there. So now we will be zooming in to the daily, taking a look. We haven't really looked much at the Ichimoku cloud in the past, but maybe that will change, because that is a tool that I really like using and something that I find very powerful for identifying trends as well as reversals. And it is showing fully bearish on the daily chart, fully indicating a reversal. So we got the bearish TK cross up in here, fell back into the cloud in here, bearish Kumo twist here, and price is now below the cloud and below the lagging span. That is fully bearish as far as the Ichimoku cloud is concerned. So when I see that, I do want to take a look and see what the weekly is looking like. And we see that we are threatening to break down below the cloud on the weekly. Very thin cloud, indicating very little support as far as I'm concerned. And the Tenkan and the Kijun Sen are showing, they kind of indicated that this pullback was needed with this C clamp. These being overextended from each other, that is a C clamp, and that indicates that the market needs to return to equilibrium. And since we did not find support above the Tenkan Sen and we did not see the Kijun start to move up, that was a very good indicator that this thing needed to cool off. And now we're seeing the Tenkan start to turn over and come down as the price is testing the bottom of this cloud. So that's something that is very interesting to me. It still does show a bull trend with the bullish Kumo twist here. And that is going to be something that I always use to confirm what I'm seeing from Consensio. And I always use the most conservative option. If Consensio's signaling a full rollover, but Ichimoku cloud is not, then I'm going to wait for that final confirmation from the Ichimoku cloud. So that is going to be the most interesting long-term stuff. Very quickly, we can just take a look at my Consensio on the 4-hour, because I think it is very interesting how we have been looking at Bitcoin. Similar situation happened here, where we would close below and then not get the bearish TK cross. These are the type of reasons why I use these moving exponential moving average specifically, because they just really hesitate to cross over when they're not supposed to. Whereas here, what do we see? Fall below the 50 EMA, pull right into that death cross. Just a beautiful sell signal right there. Pull down, where would my next area of support be? Like I just said on the weekly, if this breaks down, my next area of support is the 200 EMA. Doesn't matter what time frame we're looking at. It all works the same. So we get the death cross, we come down to the 200 EMA, and sure enough, we find support. Bounce all the way back up to test the 50 EMA, but what happens? It has rolled over, and now it acts as resistance, and we quickly pull back from it. We don't even really get close to seeing a bullish crossover here. So then what's the next step that happens? Price below the 200 EMA, and the short-term crosses, giving us a bearish crossover here as the 200 has started to roll over, and it is postured perfectly for a death cross with the 50 and 200. So something I'm keeping my eye on here is if we bounce right up into this 2800 area, what that would be is a confluence of resistance from what I am seeing. I would be expecting that to resist from the crossover and from this horizontal area that we see built up around 28. If we bounce into this area right here, I think that that could be a very low risk selling opportunity that I will be keeping my eye on. The reason I say it's low risk is if these do end up recrossing and it doesn't proceed how I expect, and we do get back above here, well then at 2880, 2900, right there, everything's going to be back bullish. So I would only be looking at about $100 risk there, where if the price got back up here, I would know that these are turning back bullish and I'm ready to get out. That's why I say it would potentially be a low risk selling area. So that is the analysis that I've got on the stock market. Do you want to take a look at some questions?
Excellent.
Or do you want to wrap this thing up? Look at some questions. All right.
Well, I think what we'll do is I think we'll wrap it up, but we've got a lot more to talk about. What we've decided to do at Lucid is we're going to be doing a vlog every day. We're working the schedule out for that, but we want to talk about gold, and I think we'll do that tomorrow. We'll see what happens with the gold market, but some interesting things are happening there. We've got a lot of questions from people about asking if we would do one on options, which we will be doing, but we're working on a schedule where on certain days you will know that when we come on, we'll be talking about very specific subjects, and we've got a list of those. We're just working out the details. It'll probably be a week or a week and a half before we implement those, but in any case, we will be doing these short-term updates because the markets are giving us a lot of very important signals, and still a little bit too early to make any more calls, but I learned a lot today. It was good to go over the charts, and thank you very much, Socrates. Any questions that we have in the chat, we are going to record all of those, and we will also be doing question and answer vlogs where we go back through a number of the questions that we've got and pick out one or two that seem to be high on everyone's priority and go into a lot of detail on those questions. So with that, I'm going to bid adieu. And Socrates, if you want to say some last words.
Well, I think we covered what we were wanting to talk about pretty well, so I don't have much else to say. I sure appreciate everyone for tuning in and for contributing questions and feedback. We are doing our best to respond to everyone, and I do want to let you know that when you do ask or provide some feedback, you are being heard, even if sometimes we don't get to it right away. So thanks again for everybody tuning in, and I will bid farewell myself.
Great. Bye-bye. Thank you.